Welcome, everyone. I'm excited to have you here today. Today, we're diving into a fascinating topic. Most people don't know this. And our focus will be on how money really works. In this presentation, we'll uncover some surprising truths about money and how it functions in our lives. So, let's get started and discover what most people overlook about money. Let's talk about money and its true power. For example, having $1,000 tucked away under a mattress won't make it grow. But if you invest that money wisely, over time, it can generate significant returns. The key idea here is that money, when managed properly, becomes a powerful ally in your financial journey. It's not just about having cash, it's about how you use it. This power of money actually comes from the collective trust we place in governments and markets. That trust allows money to serve a bigger purpose, helping us achieve our objectives rather than just being an end in itself. It's important to remember that money isn't just cash or numbers in a bank account. It's a comprehensive system of exchange, a tool for trading value. Recognizing this fundamental truth can truly transform the way you approach your finances. When you see money as a tool, you start to understand its real potential to help you reach your goals. Let's talk about a key truth that often gets misunderstood. Having a high income alone doesn't automatically guarantee financial freedom. What really matters is how you make your money work for you. True wealth is built when your assets are growing independently, without you having to actively work for every dollar. Think about assets like business ownership, real estate holdings, or investments in stocks and bonds. These are the things that work behind the scenes to generate ongoing income and help your wealth grow over time. On the other hand, there are things like side hustles, freelance work, and your salary. These are active sources of money that you earn regularly. They're important, but it's crucial to distinguish between earning money and accumulating wealth. Many people confuse the two, thinking that earning a lot means they're wealthy. But income is simply what you make in a given period, while wealth is what you actually keep and grow over time. Understanding this distinction is essential on your journey to financial freedom. Let's take a look at this example to understand the power of saving consistently. If you save $500 every month and earn a 7% annual return, in about 10 years, you could have around $80,000. That's significantly more than just saving the $60,000 without any investment. It shows how strategic saving and investing can really accelerate your wealth. Now, a good rule of thumb is to aim to save at least 20% of your income. The key is to deploy that money strategically for maximum impact. It's not just about saving blindly, but making sure your savings work for you. It's also crucial to resist the temptation to increase your spending as your income grows. Maintaining financial discipline is essential. Spending less than you earn keeps you in control and on track for your goals. One way to do this is by avoiding lifestyle inflation. Build a budget that prioritizes savings and investments before allocating funds for discretionary spending. This way, you're ensuring your financial future is secure. Prioritizing saving and investing means understanding exactly where every dollar is coming from and where it's going. Knowledge is power here. Knowing your cash flow helps you make smarter decisions. And finally, diligently tracking your finances isn't just about stashing cash. It's about creating a deliberate, thoughtful financial plan that keeps your future in focus. When you combine strategic budgeting with consistent saving, you unlock the true power of your money. Let's take a closer look at how compound interest works with a simple example. Imagine you invest $10,000 at an 8% annual interest rate. After 5 years, that investment grows to about $14,693. And if you leave it for 10 years, it can grow to roughly $21,589. The key takeaway here is that time is your greatest ally when it comes to investing. The longer your money stays invested, the more it can grow exponentially thanks to compound interest. Now, beyond just leaving your money in a simple savings account, there are various ways to invest and grow your wealth. One option is direct ownership, or investing in ventures with growth potential, like businesses or real estate. Businesses, for example, can generate income or appreciate in value over time, providing substantial growth opportunities. Real estate offers similar advantages. Properties can produce rental income or increase in value, making them a powerful investment. Another option is bonds, where you lend money to entities like governments or corporations. Bonds tend to be lower risk and offer steady returns, making them a reliable part of a diversified portfolio. Then there are stocks, where you own a piece of a company. Stocks can be more volatile, but they also hold the potential for high growth, especially over the long term. Ultimately, investing is where your money really begins to work for you independently. The most powerful concept here is compound interest, earning returns not just on your original investment, but also on the interest that accumulates over time. That's how your money multiplies and how wealth can really grow exponentially. Let's take a moment to clarify some common misconceptions about money. First, many people believe that saving alone will make you wealthy, but the truth is, actively investing your savings can significantly multiply your wealth by harnessing the power of compounding over time. So, saving is important, but investing is what really accelerates your progress. Next, there's the idea that all debt is bad. However, strategic use of good debt, like a mortgage or a business loan, can actually help you grow your assets and build wealth. It's about understanding which debts serve a purpose and can work in your favor, rather than avoiding all debt altogether. And then, some think you need a high income to get rich. While income is helpful, managing your expenses and consistently investing are often more vital. It's about how well you control your money and make it work for you, not just how much you earn. Many misconceptions like these can really hold you back. That's why it's so important to separate fact from fiction when it comes to building your financial future. It's not just about how much money you make. It's really about how much money you keep and grow over time. Your financial journey is unique to you, so it's important to focus on your own progress rather than comparing yourself to others. Remember, avoiding comparison helps you stay on track and build confidence in your personal financial path. Learning to make your money work harder through strategic investments is key. This is where leverage and opportunities come into play, using your resources wisely to maximize growth. And it's crucial to prioritize sustainable wealth, thinking long-term, rather than seeking immediate gratification, which can often be fleeting. Finally, your attitude and beliefs about money are just as important as your actual earnings. Having a strong, positive money mindset can open doors to new opportunities and help you make smarter financial decisions. So, developing that mindset truly is the secret factor to long-term financial success. Let's talk about how to keep building your financial knowledge. It's important to continuously learn from a variety of sources like books, reputable websites, podcasts, and financial experts. This helps you stay informed and make smarter decisions. Remember, increasing your financial education is a key step toward financial empowerment. Next, setting up automatic transfers to your savings and investment accounts is crucial. By automating these transactions, you ensure consistency, which is vital for building wealth over time. It takes the guesswork out of saving and investing, making it easier to stay on track. Speaking of investing, make regular contributions to diversified investments such as stocks, ETFs, or real estate. Consistent investing helps grow your wealth steadily and reduces the impact of market fluctuations. The key is to stay committed and keep investing regularly. Now, an emergency fund is essential. Aim to save enough to cover 3 to 6 months of living expenses in an easily accessible account. This safety net provides peace of mind and financial stability if unexpected expenses arise. Finally, gaining clarity on your cash flow is fundamental. Use apps or spreadsheets to track where every dollar goes. Knowing your spending habits helps you make informed decisions and avoid unnecessary expenses. Transforming these ideas into action is how you make your money work for you. By following these concrete steps, you're taking control of your financial future and empowering yourself to reach your goals. Start small, stay consistent. That's really the core message here. The journey to financial freedom isn't a quick sprint. It's more like a marathon. And what makes the biggest difference is those small, steady actions that, over time, add up to something significant. Think of it like compound interest. Your efforts build on themselves and create real momentum. Most people don't realize this because they often focus only on earning more money. But earning is just one piece of the puzzle. The real key is also saving wisely, investing thoughtfully, and leveraging your money effectively. That's the paradigm shift we need to make, understanding that how you manage and grow your money is just as important as how much you earn. Money itself is a powerful tool. It's not just about having it. It's about understanding its true nature and using strategic principles to work for you. When you harness that power, you're well on your way to lasting financial independence. So remember, it's a gradual process. Being consistent, making smart choices, and understanding the bigger picture will help you reach your financial goals, step by step. Let's talk about a mindset that can truly transform your financial journey. Don't work for money, make your money work for you. This means shifting from simply earning and spending to actively investing and growing your wealth. When you focus on making your money generate more income, you're leveraging the power of compounding and smart investments. Remember, make money work for you is more than just a phrase, it's a strategy. Knowledge paired with action is the engine that drives financial success. Learning about investments, savings, and financial planning is essential, but taking consistent, deliberate actions is what really makes a difference. By embracing these insights, applying them diligently, you'll start to see your wealth grow over time. Your future financial stability depends on the decisions you make today. And the best part? Your financial future starts now. The sooner you begin to implement these principles, the sooner you set yourself on a path toward greater financial independence and security. So, let's take control and make that initial step today.